Good morning, everyone. It's Caddy with Money Investing. Thank you so much for joining in for our Market Open live streams. QQQ right now, pre-market after the inflation numbers is slightly down about 22 basis points. We've got the Dow Jones here also down 25, 29 basis points, and the SPY ETF is down a little bit over 27 basis points as well. So we're seeing a very, very small minor gap down here for the markets. I was going to be doing videos on Tesla and inflation, but I've literally been under the weather and I've just got like a mild fever here. Nothing's new. Happens like usually a few times a year with me. But those videos, I'll definitely try to get them out as soon as possible. I know you guys are waiting for a full detailed analysis on CPI and inflation and what my thoughts are moving forward based on these different probable outcomes. So I'll try to get that out as soon as possible. But yeah, thank you so much for joining. I really appreciate it. If you guys can see me and hear me, just give me a thumbs up. I just want to make sure the audio and the video is working well. So if you guys can see the screen, see myself, and can hear me, just give me a thumbs up in the chat. So when it comes to earnings, today we do have Shopify and Roku reporting along with Twilio after the bell. Pre-market, we just had Roblox, Trade Desk, Biogen, and Kraft Heinz reporting earnings, and then Upstart reported last night. They were, I think, slightly higher. Last time I checked, they were very flat. But pre-market right now, they're up close to 5%. So I'll be breaking them down again in a separate video as well. Looks like they did report a much narrow loss per share versus revenue also coming in with a strong beat. So what I'm going to be interested in is their 2023 guidance moving forward, right? What are they actually guiding for moving forward? And InMode here had a very strong rally after their earnings, rallied over 10.5%, trading back over $37.50. They also reported it yesterday pre-market. And like I said, we'll take a look at Shopify and Roku and Twilio after the bell. We'll do some analysis on them. And later this week, we've got DraftKings, we got Vail, we got DoorDash, and we've also got John Deere reporting their numbers. So perfect. Everything's working great. Awesome. So going over to some inflation numbers. So UK inflation also came out and it dips down to a third straight month to hit 10.1% on a year-over-year basis. So the UK inflation rate fell for the third month in a row in January to hit 10.1%, below economists' expectations. But high food and energy prices continue to put the pressure on British households. And economists were expecting 10.3%, so we came in a little bit lower than what the consensus was. And inflation has fallen consistently since hitting a 41-year high at 11.1% back in October. So it is dropping for the UK, but it's not dropping as fast. And it's also coming off of a more recent peak. October was literally just 4 months ago. Whereas for the United States, we are coming off of the peak from back in June and July. So it is falling, but not obviously as fast as what we'd like to see. Core CPI, which doesn't include food, energy, alcohol, or tobacco, was 5.3%. So you can see that food and energy playing a bigger contribution, a substantial contribution in overall CPI, because once you strip those things out, we're sitting at 5.3% for the UK, which is, almost half of the overall headline inflation. So it just goes to show how much of an impact is food and energy making over in the UK. Now, moving forward, Elon Musk is also aiming to appoint his successor as Twitter CEO by the end of 2023. I think that is a very wise decision from Elon Musk. He doesn't have to spread his time too thin, and could be one of the reasons why Tesla stock is pushing higher. We also learned that he donated a few million shares to charity last year in 2022, and he's already vowed for not selling any more Tesla shares, not in 2023, maybe not even in 2024. But right now, it's up almost 2%, so getting back up to $213, same exact level where it was on February 9th. And right now, we did get a bit of a pullback, and very strong day yesterday on heavy volume, and pre-market once again charging higher. Retail sales came out this morning at 8:30 a.m. Eastern, and to our surprise, the month-over-month change was actually very strong at over 3%, coming in versus the consensus of 1.7. So, we got almost, double the consensus there. And ex-vehicle and energy, ex-vehicle month-over-month came in at 2.3% versus 0.7%. And ex-vehicle and gas came in at 2.6% versus 0.6%. So these are some stellar retail sales numbers. Just goes to show that we are seeing a significant increase in month-over-month spending when it comes to the retail sector. Of course, in the previous month, we did see a decline for all three categories. But right now, we're seeing a pretty substantial increase, 2 to 3%. on all categories for retail sales. This right here is something different, which I don't want to go over. We can probably refer back to this, but this is a really, really interesting table, which goes over data from back in 1914 to 2020. So, we're going back a pretty substantial amount of years. So like almost over 100 years, actually. We're going over this data, and it pretty much tells us the average price earnings multiple for the S&P 500, depending on the capital gains tax rate, which tax regime we're in, and the inflation that is, that's in the economy. So right now we're obviously in a plus 4%, and we are, arguably in a high tax bracket environment, which we have seen 26 years in the last 100 plus years, and the average price earnings multiple in that environment is usually around 11. At the best, it's 14.4. If you're dealing with high inflation and low taxes, 14.4, which is what we've been kind of debating about. The average P multiple for the S&P should really be at around 14 to 15. But obviously we're trading at 17 to 18 levels at the moment. So yeah, Jay, thank you so much. I really appreciate that. And it is very common. I mean, it's crazy how often I get sick here in India. I mean, it's been exactly 2 years since I've moved back to India. I came back in February of 21, and right now we're in February of 23, and in 2 years I've fallen sick like 6 to 7 times already, and it's been crazy. Like weakness, infections, fevers. It's just it's all over the place. Whereas when I was in the U.S. for 6 years, only got sick maybe once. I can barely remember, but yeah, it's pretty brutal over here in India. So definitely need to figure that out. It takes 5 years for allergies to get used to. Yeah, I agree. I think allergies is also a big part of it, as you are. Yeah, I'm vaccinated, got booster shots as well. So pretty much got 3 vaccinations here. The first dose, the second dose, and the booster dose. But yeah, the allergies, I fully agree. I think when the weather changes, especially when there's a lot of pollution that you're dealing with, that really kind of hits home when it comes to just infections and stuff. So, but anyway, hopefully get better. I'm just staying hydrated and taking very, very light food. So hopefully we'll be back to normal by the end of this week. So Tesla, 1.73%. I've been meaning to do a video on Tesla as well. But like I said, just didn't get the chance to do it. Let's just go over some catalysts here. So Tesla to open superchargers to non-Tesla electric vehicles in US. Now this right here would be a big revenue driver for the company, right? This is what a lot of people have been waiting for, because the supercharging network is wide. It is big, especially in the United States, especially in both the East Coast and the West Coast. There's a lot of superchargers, right? And Tesla can actually start earning money, from non-Tesla vehicles. That is an additional source of revenue that Tesla can generate. So the company will make at least 7,500 chargers available for all electric vehicles by the end of 2024, including 3,500 new and existing 250 kilowatt superchargers along highway corridors. In addition, Tesla will open its destination charging network, allowing charging at locations like hotels and restaurants in urban and rural locations. And White House said Tesla's move is part of the Biden administration's $7.5 billion investment in EV charging to achieve net zero emissions by 2050. So that's one piece of catalyst. And of course, he's also, Elon Musk donated about $2 billion worth of stock to charity. And he also vowed that he's not going to be selling any more shares in 2023. That's another catalyst. And we're getting a little bit of a pause in production in Shanghai amid factory upgrades. So again, but the goal really for this year is about 1.7 to 2 million vehicles in deliveries. That's really what's going to be the end goal for Tesla. And if they can achieve that, I think that's going to be a pretty substantial revenue number. And at the same time, getting more market share with the prices coming down when you compare that to Ford and GM and whatnot. So John, nope, health not active after the shots. It was fine. It's just, it is what it is. It's just been happening in India. I don't know. All right. Yeah, retail sales coming in very strong. Great time to sell Tesla calls, though at the $202 resistance would hold another week, John says. Yes, I do agree. I think if you have, Tesla shares, you got a pretty sizable position. What you can do is you can either create like zero cost collars, which we have done a video on, where you are protecting your downside. And it's like a free insurance policy. Or you can just simply sell calls if you are interested in kind of trimming some of that, position, considering that it's already rallied, over 110%. So it's more than doubled since the beginning of this year. But of course, it really depends if you are trading this stock or if you're investing it for the long term, say 10 years out. There's a lot of initiatives that Tesla's taking advantage of. We've got the Investor Day presentation on March 1st. We're going to get some updates on the renewable energy future of the Earth. So maybe that's something that Tesla might play a big role in. So it really depends, what type of investor you are in Tesla. Are you making for swing trade, or are you betting really for the long term, next few decades on Tesla? And the potential is huge. The opportunity is significant, but obviously at the same time, you have to keep reminding ourselves about the valuation and the price that it trades at, whether it makes sense for Tesla to be trading at that level or not. Of course, it's rallied quite a bit in 2023, so we can't ignore the fact that it's up more than twice. 110% is not a small amount. So I already do have some covered calls sitting at 250. So that's going to be sitting roughly at around, the 300 SMA. If it gets up to that level, that's fine. I'm going to be able to kind of net in a huge profit. But if it does drop here, gets a pullback down to 165, that's also fine. We'll collect those premiums and we'll probably even dollar cost average add a little bit more. Yeah, John says, investing long shares and decided to take advantage of the crazy premiums and wish I went out on the strike a bit more. Yeah, it's really important, right? So when you're choosing your strike prices for calls, it is extremely important to always remember two rule of thumbs. Number one, always pick a strike price which is above your cost basis, right? You never want to get rid of a share which is going to be selling for below your cost basis, because then you're going to be realizing a loss. So whenever you're picking out your strikes, always for covered calls, make sure that your strikes are above your cost basis, unless your goal is to incur a loss, which I don't know why that would be the goal. But the second thing is to make sure that you pick a strike where you're comfortable letting go of your shares, right? The last situation you want to be in is if you got a great company and you've got a great cost basis, but you picked a strike price which is very close to the money for the higher premiums, and the next thing you know that you're way in the money and your shares are going to get called out after the option expires, and you're just going to be missing out on those additional gains if your plan was to hold for longer. So really important to make sure that you do those calculations and kind of really understand where your strike prices are and why you're choosing those strike prices. I actually did roll over my contract. So earlier my strike was 230, which is kind of in line with that 200 SMA. I didn't think that Tesla was going to be able to break out above $200. It did kind of pull back a little bit, came down to like 185 just yesterday, and then a very strong rally coming in, and we're back above 212. So that's why I had to roll out my call. I think I did that back in February, on February 9th, when it was trading at 213. So we'll see. I mean, if it gets up to 250 by April, that's great. If it doesn't, that's also fine. Okay, Frank, Caddy Shop earnings preview for today. Thoughts? So Shopify is actually in a very interesting situation because they haven't really been able to produce any profitability. So we can go take a look at Shopify's numbers, and what you'll notice is that there's been an unusual income or unusual gain for which they reported very strong earnings last year. But that's not really the case. That's not really true, because on a non-GAAP basis, sure, they reported some good numbers. Like you can see over here, 2.9, almost $3 billion. But, a lot of that came from like unusual items here. So that's, $3.1 billion. So that's how they pretty much generated that profitability. And that's why you have to look at the GAAP EPS for the company, which obviously was much lower. So the question that I'm asking myself for Shopify is, when can we expect this company to be profitable? Because, they've got great margins. Shopify has got 50% margins, meaning that for every single dollar that they're making in revenue, 50 cents is in gross profitability. But yet you've got net income margins, terribly negative. You've got EBITDA margins negative. Cash flow margins are slightly good, 6%, but then their efficiency also poor at negative return on capital, return on assets, return on equity. Everything is negative. So it's really an execution thing. The company has done really well in growing revenues, growing customers. But what I want to see is, can they actually turn the corner on the bottom line and actually achieve some profitability? Because then we'll be able to better understand, okay, what's the valuation for Shopify and what's the fair value for this company? Right now, even in our intrinsic value spreadsheet, the Google spreadsheet, Shopify has no fair value. I think it's like $2 or $3, which is not calculated correctly because of the fact that they're not profitable yet. And price to sales trading at 11 to 12 times. I'll let you be the judge of whether that is appropriate or not. For me, it isn't. 11 and a half, 12 times sales is actually really high. By the way, I actually feel a lot better just live streaming right now. The entire day I was like in my bed, I was like, oh, I hate this. And now I'm starting to kind of feel my energy level come back in, feeling a lot better. So maybe it's you guys. Maybe it's our live stream. It's our togetherness that's kind of helping me right now. But to be honest, I don't feel as bad as I did before starting the live stream. Chris says air bad here in Thailand too, mainly only this time of the year because of open burning. Yeah, that, and then of course we also have like smog and fog and whatnot. So I totally get it, how bad it could be like in Thailand as well. Will you be doing a video on InMode with recent earnings? Yes. So I will be doing a video on them as well. I know I owe you guys a lot of videos, but we'll definitely be doing some analysis on them. What I'm really interested to see, let's just quickly go over InMode's earnings here, live here. Let's see, earnings, investor relations. We'll see. I mean, whatever analysis that we can do right now on screen, we'll do. Otherwise, I'll do like a separate video kind of calculating their intrinsic value as well. So they did a report for the fourth quarter, right? So revenue did jump 21% year over year, 133 million. I think EPS was also up pretty substantially. So let's just come down here. So for the entire fiscal year, they did revenues of 454 million with 84% gross margins. So excellent margins. I mean, InMode is one of the very few companies in this sector that is able to achieve such high margins because of the cost of operations and cost of production is really low compared to their US counterparts. So 454 divided by 357, we're looking at a 27% growth for the year-over-year basis. And then earnings per share actually did decline a little bit on a GAAP adjusted basis, right? So once again, on a GAAP basis, we did see net income slightly decline from 165 down to 161.5, and EPS also coming in under $1.90. But on a non-GAAP basis, once they're kind of adding back some of their non-cash expenses, net income ended up at $207 million, so 207 divided by 176, and that's a growth of about 17.6, almost 18%, and EPS was also up about the same amount, right? So a little bit over $2.42. So if you do the math there, InMode right now trading at 37.30. So if you take 37.30 and we divide that by 242, right now on a trailing 12-month basis, InMode is trading at 15.4 times earnings when they grew their earnings by 242 divided by 205. They grew earnings by 18%. So this is actually a very good PEG ratio. When a company grew earnings by 18% and their P multiple is 15, that's a good PEG ratio, right? That's under 1. So it makes InMode a very favorable company from a valuation standpoint. Now they're also expecting revenues between 525 and 530. So if you take that mid guidance of let's say 527, and the revenues this year were 454, so 527 divided by 454, expecting a growth of 16%. So you can see how it's kind of moderating a little bit. It's coming down. It's not as high as it was before. And the EPS forecast is 252 divided by 242, and that's a growth of 4%. So forward growth only expected 4%. However, I will say that InMode is known for under-promising and over-delivering. That's been kind of like their mantra for their entire existence. I've gone through several InMode's earnings calls and presentations, and they've almost always under-promised at the beginning of the year, and they have over-delivered towards the end of the year. So I would personally, knowing the company, I would not take them at face value that they're only going to grow at 16% and EPS is only going to be up like 4%. I can safely assume that, okay, it's going to be a little bit higher than what they're telling us, because that's just the trend that they follow. So yeah, 4% is not a lot in earnings growth, and trading at, if you take a look at 37.30 here divided by 257, was it? 14 and a half times earnings, which is, again, a little bit on the more reasonable side compared to a lot of their stocks out there, right? A lot of companies right now are trading at over 20, 25, even 30. I mean, most companies like Tesla and Nvidia are back up to like their 40 and 50 times earnings multiples, considering how much they rallied. So it's very difficult to find companies such as InMode that are trading at like 14, 15 times earnings multiples. So definitely a very, very good multiple. But I think the growth rate slowing down is a bit of a question there. So Elias says, don't bet against the U.S. economy, Warren Buffett said. So yep, that is very true. But yeah, Trade Desk running up pre-market post-earnings. So we'll take a look at that here in just a minute. Just going over some of the comments here. So Milan, Keddy, what made you want to move back to India? So that's a little off topic, Milan. Maybe we can discuss that in Discord, but really just wanted to start our community here for money investing, which I was not able to do back in the US. Yeah, Chris, again, the ChatGPT prediction, not sure if that's actually going to be correct, but I'm actually very interested to see whether the market's going to hold up after the morning after the inflation numbers coming out. Because to be honest, like if you guys want my honest opinion, and I was going to be doing a video as well, but due to the weakness and the mild fever, I was not able to. But inflation numbers overall were not super great, right? And we've talked about this, and Ray Dalio specifically mentioned this in his report, right? So if you come over to Ray Dalio's Stagflation LinkedIn, all you have to do is search this. So this is a post from Ray Dalio, which I broke down, not too long ago. So you can see how, principal perspectives, reducing inflation will come at a great cost. Stagflation. This is from Ray Dalio. And this came out back in June of 2022. So literally about less than a year ago. And there's a complete detailed analysis. I mean, I've covered this in a video that you can also watch, but what he says here is that in summary, my main points are that there isn't anything the Fed can do to fight inflation without creating economic weakness. Now, so far, that hasn't been the case, right? The Federal Reserve has actually been able to put a dent in inflation without creating economic weakness. We have seen the unemployment numbers stay low. The jobs market super tight. Retail sales, we just got the report this morning, coming in strong. Industrial production, yes, I mean, there's some reports that are suggesting that are slowing down, but there hasn't been a significant amount of economic pain or weakness. And even after that, inflation's been able to come down a little bit. Number two, with debt assets and liabilities as high as they are and projected to increase due to the government deficit, which is one of the scariest parts about the U.S. economy, and I've mentioned this before, is that if there's only one thing that kind of keeps me up at night about the U.S. economy, would be the deficit and the ever growing federal fiscal deficit and the total debt. And the Fed also selling government debt. It is likely that private credit growth will have to contract, weakening the economy. And number three, that over the long run, the Fed will most likely chart a middle course that will take the form of stagflation, is what he mentioned. So, yesterday's inflation print is not indicative of whether we're going to see deflation, disinflation, or stagflation, but it is definitely worth taking note of that we're definitely starting to kind of slow down, but not at the same rate as we did for the last 4 to 5 months. Just something to consider. And, Tesla's still on 9.5% pre-market. Come on, right? That's not true. That's not true. Tesla here is up, 2% last time I checked? Yeah, 1.75%. You just wanted me to look at Tesla, didn't you? That's why you mentioned 9.5%. So Mohammed says, I used ChatGPT for the first time to solve a problem at work. It was amazing how it gives you the exact answer to a very specific technical issue that Google will never be able to answer. That is that's interesting. Quite interesting there, Mohammed. I'm glad you were able to use it. And now imagine, when this comes into Bing, because then you're gonna not even be able to like chat with it and get the answers you need. You will also be able to get the citations, because Bing is going to include the citations. It's going to literally tell you where it's getting those responses or where it's getting that data from, so you can go and verify it and double check it. So yeah, it's kind of crazy how things are evolving there. All right, let's take a look at, they can't even pay the interest on the debt. That is true. That's a very unfortunate situation that we've created in the US, but we'll see. I mean, one of the things that I think is really interesting is that these cycles take a really long time. These cycles take a really, really long time to develop and happen, right? I mean, when we talk about not just companies, right? Business cycles are much shorter than cycles for specific countries, right? I mean, when we talk about which countries were in power before the US, the Great Britain, before that, there's a lot of countries, I forgot what the name was, but these cycles take hundreds of years to play out. So it's possible that Ray Dalio, he might be brutally wrong in the short term, right? And Warren Buffett's saying that, okay, don't bet against America, is true in the lifespan that he's been alive and still is. But you never know what the future holds, right? Things can go sideways, things can go wrong all the time. So we have to really be prepared and not really take them at face value, because a lot of things can change over time. A lot of things can happen as these cycles play out. So anyway, let's just quickly go over Trade Desk and up 16% pre-market post earnings, what a run-up this is. So, all right, let's just go over TTD. So we're seeing 16% rally here. It's a very strong move. And again, Trade Desk is one of those names that is also, I think the valuation side is a little bit higher. Beat on revenue, beat on earnings. So we are seeing Trade Desk come in with a Q4 adjusted earnings higher. Revenue authorizes a $700 million share buyback. So that is a really good share buyback. And we don't have, okay, so company said it expects Q1 revenue to be at least 363 million. Analysts were expecting 362.8. And additionally, the company said its board has approved a share repurchase program of about $700 million. So if you do the math there, 700 million, so 1, 2, 3. So that's divided by $58. That's about 12 million shares, right? So a little over 12 million shares. And for Trade Desk right now, not sure how many shares outstanding they have. I'm just trying to calculate what percentage of float are they buying back, because Meta, when they came out with their massive $40 billion buyback, that was like 8 to 12% of their float, which is a pretty substantial amount. But Trade Desk has diluted shares outstanding about 489 million, or 485. So 12 divided by 485, that is about 2.47%. So a little bit under 2.5%. So ideally, on any share buyback news, you'd expect the stock price to go up exactly how much they're buying back. So in this case, would have been 2.5%. But that, in this case, I think is the additional benefit they're getting, along with the very strong earnings beat, revenue beat, and probably the guidance that they guided for. So coming up to that resistance at $59.60 per share for the business. So that's going to be that resistance to watch. So Oleg coming in with a very nice summary there. So great sales, retail sales, came in very strong, means great earnings, great GDP. Sales is 1/4 revision up. Logically, there is nothing to land in that economy, and we can continue to grow. So I'll give it to you. Oleg, I think retail sales came in very strong. So again, we'll see how that translates over to the overall GDP, the economic growth, and whether we can see earnings continue to come in stronger. By the way, there was another report from FactSet that I wanted to go over. Quite interesting about the earnings, because they actually do a really good job in kind of putting together the earnings summary and what's actually happening with the S&P 500 companies, and what's the EPS, the forecast, and all that stuff. So I remember seeing something that came out in the last couple of days here. If this thing decides to load up, we can take a look. There we go. All right, so February 13th, so just a couple days ago here. So markets punishing negative EPS surprises, less than average for S&P companies for fourth quarter. All right, let's see here. S&P 500 companies that have reported negative EPS surprises have seen a much smaller price decrease than average. So again, that's that line in itself tells you a little bit about the sentiment, right? The sentiment continues to be very, very strong, right? The sentiment is really bullish. It's really positive. And the 5-year average price decline has been 2.2%. But instead, in fourth quarter 22, the companies that are missing their estimates or reporting negative EPS surprises are only down on average 0.4%. That just goes to show that the sentiment is just so strong for the entire market right now. So companies that have reported positive EPS surprises have been slightly larger price increase than average. That also, goes to show that we're seeing a little bit of a bullish sentiment here. 69% of the S&P 500 companies have reported earnings for the fourth quarter, and of these, 69% have reported actual EPS above the estimate, which is below the 5-year average of 77% and below the 10-year average of 73%. So we're seeing fewer companies come in with a beat on the upside. But that being said, the guidance obviously is what's going to matter in 2023. And this, again, is something that's also really interesting for us to look at, because if there is a repricing in overall average price earnings multiple, then that there could be a pretty significant pullback. The markets really has been very indecisive, that's for sure. It's been very much back and forth, and SI is running Soros and Citadel buys up 9% pre-market. I heard that George Soros picked up Tesla, if I'm not mistaken. I think they bought Yeah, I think they bought a lot of Tesla shares, but they're pushing up over 6% here. So George Soros is short. Silvergate is a short squeeze possible. And that's what we're really seeing right now. So in their 13th filing, these are some of the shares that they picked up. And I think Tesla was also on here. There we go. So right here, Tesla Incorporated. This is from George Soros Fund. And you can see that they picked up 24. This is, let me see. I call them value to the nearest dollar. So that's in dollars. That's the amount of shares. And whether it's a put or a call. And let's see. So yeah, they picked up like 200,000 shares worth of calls and then 132,000 shares without any options attached to it. So yeah, a little bit of a small purchase from them. Anyway, we're ready for the open here. Less than 8 minutes. Tesla here, pre-market pushing up 1.3. We got Google here down 0.5%. Apple's down 30. You got Microsoft down 76. Nvidia was also down last time I checked, down about 1.29. So what's the poll saying for us today? We have got 45. Wow, pretty split. Pretty split. I think that's exactly what the market's also feeling. Lots of indecision, right? Market doesn't really know how to digest these numbers, and we're constantly seeing a lot of revisions on the Fed funds futures. So let's just see where they're sitting at right now. 25 basis points is almost guaranteed in March, but what happens after is really the big question. So 90% probability that we're going to see another 25. So now the market's once again 75 basis points priced in up until June, and then one cut in December. I think I mentioned this yesterday. I forgot. I don't know if you guys remember. I mentioned this. Wouldn't be surprised if this number gets up, this number also pushes higher because in my yesterday's live stream, if you guys remember, we talked about this because it was more like a pyramid where it was like going up 75 and then getting cut 50 or 75. And then we also talked about how we wouldn't be surprised to see the rates higher for longer and then only just one cut being priced from the market in December. Even that, I think, eventually might go up to 5.25 to 5.5% to kind of stay there from the Federal Reserve. All right. So Oleg says, no hike in March as CPI will fall like a stone due to comparison to the previous year base when February, March was peak. Simple math will tell that fall will be big. Fed will be shocked. I think another 25 is needs to happen. I mean, that's pretty priced in right now. Let's just go over to this. And I think we peaked back in June and July. Oleg, I don't think it was in February and March. So as far as I can remember, I could be wrong, but yeah, so June and July. June was the number, 1.2%. That was pretty substantial. February and March was also pretty high, but once again, if you take a look at this chart over here, you'll notice that, June was the peak for inflation, right? That was the number. So again, year-over-year comparables, when we're comparing June 22 versus June 23, yes, that would pretty much make us look very good on inflation. But February and March, we were still kind of battling under 9%. So not the peak for inflation. I think it was back in June here. So we'll see. I think 25 basis points is still something that the Federal Reserve will probably end up doing. So Matt, can you see something breaking in the markets before they do cuts? I think interest rates to this point are now fully priced in. I don't think we've already gotten up to 4.75 to 5%, right? I mean, what's another couple hikes of 25 basis points? And the markets can handle that, but it's just a question of whether the economy can handle it or not. It's are we going to see high levels of unemployment? Are we going to see production kind of pull back, consumer spending pull back? Are we going to see, the GDP contract? Those are the types of questions that, we haven't really seen that happen. And that is one of the reasons why I think the Federal Reserve has been able to put a dent in inflation without causing much economic pain. But another couple rate hikes, I don't think the market's going to be freaked out about that because we're already at such a high level. What's another 25 or 50 basis points? not really that much, but it's the economy. Can the economy handle that or not? And that, I don't think anybody has the answer to that. Kevin says 50 basis points in March, just get it over with. I'm kind of like in the same camp, Kevin. I agree. Just get us out of our misery here. 250 basis points, call it a day. Everyone goes home, and now we know no more hikes from the Federal Reserve. But I think the real question really is going to be whether the economy can handle it or not. I don't think anybody can answer that question with any certainty. All right, so QQQ is down about 61 basis points. We got the Dow Jones down about 0.5%, and we got SPY also pulling back about 0.5% here, right a couple minutes before the open. Switch over here. We talked about a lot of companies this morning, guys. So we've already, covered InMode. We covered Upstart. We covered, of course, Palantir. Did a video on. Still have to do a video on them. Shopify. We talked about very briefly. Twilio. I'm excited about Twilio as well. We talked about Trade Desk as well. But Twilio is another stock that I'm really paying attention to, whether they can actually achieve profitability or not. For a lot of businesses, and again, this is something that I've already mentioned before in the live stream, but I saw that on Twitter where somebody mentioned that it's very easy to build a brand. It is extremely difficult to build a business. If you think about it, it's a lot of these companies, not saying they're bad companies, but they're great brands, right? The question becomes, can they actually execute and become profitable? Because at the end of the day, that's really the goal, to return cash to shareholders, be profitable, make shareholders be more entitled to profitability and earnings. But let's see. All right, so off we go here. S&P opening down 0.5%. The Dow Jones coming in with a pretty substantial red candle, down about 182 points. The 10-year yields are on the move, up another 1%, almost getting up to 3.8%, with the Nasdaq down about 0.5% here right now, with Tesla still green, still managing to trade at over $211, with Google here down, Microsoft really hurting, down about 1.3%, and Apple also just struggling a little bit, just more or less flat. Tesla's the only large cap name that's up here. Nvidia's down 1.8, Meta's down, Microsoft, so a lot of large cap tech is struggling here, with Trade Desk the clear winner on the day, along with Roblox. So Roblox also on earnings pushing higher here. So Roblox double beat. No, single beat. We just got an EPS beat. So a little bit of a shorter loss. Man, they missed on revenue. That was a huge miss. 579 million versus estimated 870 million. And the stock is up. So net bookings rose 17% to 899 million. And analysts were expecting 867 million in net bookings and $99 million in adjusted EBITDA. So average daily users remained flat sequentially, and 58.8 million, but up 19% from same time last year. But that was a pretty brutal revenue miss here. It's still up 20%. So Arnold says, feel like Tesla FOMO despite being in. Yeah, I mean, that's how the markets play with you, line games here. But like I said, we talked about Tesla here earlier. We talked about covered calls. We talked about zero cost collars. Let's see if there's any opportunities here. So Tesla for options here, 1 month out, March 17. I mean, the premiums are fantastic. I mean, as soon as this thing loads up, it always gives me some problems right at the open. But as soon as I can get access to some premiums here, we can do some analysis. But premiums have been insane for Tesla, right? I mean, every time it gets up to 213, 215, like I remember February 9th, which was last week or the week before, very, very strong premium. Like we were getting $20 per contract. Absolutely insane. Upstart's flying as well. Roblox up 21%. Upstart's up 14% now. Ooh, Sheesh. Lots of buyers stepping in for Upstart here. For Upstart, it's more like a timing issue. It's more of a timing issue. They just need to weather through whatever is happening in their industry right now. Loan volumes is dropping. They're generating losses right now, negative cash flows. So you just need to kind of weather through this process. Eventually, they can come out on top. But Nima, we heard you the first time. People didn't buy Tesla at 108 dip. They want to buy 200. Who wants to buy 200? So Upstart, Upstart pushing higher quite a bit. But yeah, not foaming anything, Lauren says. That's good. FOMO is not great. Can put you in some very difficult situations. So PayPal here, pushing higher, 66 basis points. So we're getting a little bit of a bounce back higher from that support of 75. So this right here, we talked about that support in our market updates. We got down to $76, seeing some buyers to step in right now. So QQQ here, kind of getting up there to fill the gap. And Google also pushing higher, back up to 95. Apple's green, Google's green, Tesla's green, Microsoft trying, still down 1%. Man, the sentiment's strong here. So Matthew, Caddy, would you add on 200 Tesla? No, I don't think I will. I've already got covered calls sitting at 250, so not really for me unless it comes down to like in the 160s. Not really for me. I'm happy with my position. Like I think close to 600-700 shares for Tesla, so I'm happy with what I have. So not really planning to add anymore because overbought. Like technically, just way too overbought. So I'm not really super interested right now. What's Meta doing? So let's see. Meta, it's got a big gap, right? I mean, it's got a gap both on the downside and on the upside. So we'll see if Meta comes down to kind of fill this gap here. Looks like it is. Right now it is because it did come down to fill a little bit. Then we started consolidating sideways. Support level all the way down to 153, 154. Resistance right now is going to stay put at 183. And then, of course, we got a big gap from the earnings from last year for Meta. So Abhishek, no, I did not know that. So Buffett sold TSM. What do you think about that? Well, at least he made money on TSM, right? I mean, it's rallied so much, but that was a really short trade. So he's just cutting a small stake here. I don't know if he's completely out, but cut his position in TSMC by 51.8 million shares in the last 3 months. That was roughly 86% of the investment. Okay, so 14% really not that big of a position anymore. But definitely he did see something in TSMC. I mean, very excellent cash flows, very strong earnings. But one of the things that I mentioned was the geopolitical tensions between China and Taiwan, and nobody can really appropriately price that in from a risk standpoint when you're investing in companies. Geopolitical risk is one thing that we can't really price in well. So Trulieve, yes. So Yenser, I will be doing a video on them. They are reporting earnings in March, so I will be doing a video on them very soon, and we'll be talking about that. Yeah, 86%, Nima says. Burry and Baba. Why? I don't know. I mean, Michael Burry has just been all over the place. I feel like he's literally been all over the place. So big short investor Michael Burry bets on Alibaba and JD this time. Wall Street agrees. What great timing though. Like if he actually bought in the fourth quarter of 2022, yeah, so if he did buy it around those times, I mean, he'd kind of time it well, because since January alone, stocks, rallied 18%. It was much higher, of course, 37%. But yeah, I mean, it's just like, one first he's like out of in tech stocks, then he's out of growth, then he's into some prison companies, then he's out of those, then he's now into Chinese companies. It's like he's all over the place. So yeah, make sure that you drop a like. I would really appreciate it. Let's take a look at Arista Networks, ANET. And this stock, 1.74%. They reported earnings, very strong move for the upside. Really getting up to that overbought levels, but almost getting up to all-time highs here. And this is the overall higher highs and higher lows for Arista Networks. A very strong rally for this company. But it's on the radar. It's on my watch list, but I'm not really taking any action right now, just because the technicals are... QQQ looks weak. I'm not going to lie. Getting rejected at that 9 EMA here. Shunk, no, not daily after streaming. We pretty much really just focus on long-term investments. But yes, sometimes I do day trade, for which I do send out the alerts for. Anyway, so that's going to be it for today, everyone. I really appreciate you guys joining in. Like I said, I was going to cut this live stream a little short because I'm not doing super well. Still under the weather, so hopefully I get better by the end of this week. But thank you so much for joining. I really appreciate it. Make sure that you drop a like, subscribe to the channel if you're just joining us for the first time. And the link to our Discord and Patreon is going to be down below if you're interested in joining us. As always, happy investing. I'll see you all in the next video.